South Africa, it's one of the countries that is blessed with a lot of different minerals in the world. And in this video, guys, I just want to share with you another way of an ordinary South African citizen can also benefit from these minerals, because recently we've been opening new mines. I think you've seen the headlines which were covering West mining here in the west of Joburg, which is the new gold mine that has been opened, which is currently now under development, And also recently, the president, Mr. Cyril Ramaphosa, just now was invited to open Ivanplats mines, which is owned by Ivan Ore Mines, and the co-founder of that mine is Robert Friedland. So when I looked at those videos that were actually on social media and also on internet, of those new mines which are being opened here in South Africa, most of the South African citizens, the youth especially, they were complaining, saying that why are we letting people from overseas to come here and open mines? How are we benefiting from these minerals? And that, to me, it actually shows that there is a little knowledge about mining to most of people out there. A lot of people don't understand mining. So in this video, I just want to explain to you another way that you can also benefit from the mining industry, and I will be talking about manganese mining. So manganese, it's one of the minerals that it is mostly found here in South Africa. In terms of the stats, we have like 70% of the world-known manganese resources here in South Africa, and they are located where in Northern Cape, in the Kalahari manganese field. And there's one of the companies that is a junior mining company. It's a penny stock. It's trading around 50 cents. The market cap is around $500 million Australian dollar. So the name of the company is Jupiter Mines. So of course I'm going to be talking about that mine and also manganese, because I believe that mine can make you a millionaire in future. I mean, it has a quite long life of a mine, which is over 100 years. So with that being said, guys, I will see you on the other side. So I strongly believe that any South African citizen, can benefit from our minerals through ownership, through ownership, which is simply means that buying shares of these companies from Canada, from Australia, which are here in South Africa, permitted to develop mines here, because those guys, they have the skills of developing mines from the start up to production, which is from exploration up to production. And most of the South African engineers here in South Africa, actually, they do work overseas, but they work for companies that have capabilities of raising funds and able to develop the mines from exploration to production. So we don't have a lot of mines here in South Africa locally that have expertise of explorations to develop mines from exploration all the way to production. So it's normally the companies from overseas, China or Canada or Australia, but most of them, they are from Australia and Canada. But that's the reason why a lot of South Africans get mad when they hear these things on the news headlines that a company from Australia or Canada, it is now opening a new mine here in South Africa. And then they'll be like, why are we not benefiting from these minerals? Why are we allowing companies from overseas to come here and open mines? Now, they're missing the bigger picture here, because you can also benefit as a South African citizen from these mines by buying their shares, ownership. Own them while they are still cheap, while they are still trading below 50 cents, while they are penny stocks. Own them. All you need to know is just have a bit of knowledge, know some technical things there and then understand the mining industry, and then deploy your capital to these mines. So now in this video, guys, I want to share with you one of the stock that I own. So I will be analyzing that company. I will be taking you through my thinking process, which assists me to reach a conclusion of owning the stock and buying the shares. So the company, it's called Jupiter Mines. So it owns TP Manganese Mine, which is in the Northern Cape. And TP Manganese Mine, actually, it's mining manganese in Northern Cape. And Jupiter Mines owns like 49.9% of that mine, and that mine has a life of a mine of over 100 years. And currently the manganese prices are down, they are beaten down, but the mine is still doing quite well in terms of the profitability. They're even paying the dividends. So I will start by explaining my why, which is the reason why I bought the stock, and that it has to do with the manganese price outlook. So I'll start to explain why I think that manganese will go up, manganese prices will go up. Why am I bullish on the manganese prices? So now let's jump to the juicy part, which is all about the manganese fundamentals before we go to the stock analysis itself, which is Jupiter Mines. Now, let me explain why I am bullish on manganese and why I am accumulating shares of this manganese mining company known as Jupiter Mine, which owns this TP and the manganese mine in the Northern Cape. The first reason, it's because of the use of manganese. You see, manganese, it's used in the steel industry. About 90% of manganese, it's used in the steel industry. And also, there's been an adoption of manganese use within the energy sector. To be specific, the manganese is used in the batteries, for energy storage within the energy sector. And now let's start first with the steel industry. Currently now the steel industry is not doing that good ever since the collapse of the Evergrande, which it is the Chinese property company that is developing property in China. So most of the steel that is being produced is actually consumed in China. So of course that affected the steel industry when that company went bankrupt. The steel industry is still recovering from that. But when you look at the long-term fundamentals in terms of the countries that are still not developed, especially here in Africa and Asia, that tells you that the demand for steel over a long term, it's going to increase. And currently now with the geopolitical tensions, I don't like wars, because people lose their lives there, people lose their families. So if you take a look at what is happening between Russia and Ukraine, to rebuild Ukraine, it will need a lot of money, and of course, that most of that money will go into steel, because the steel is used into building of infrastructure, construction of houses. So to rebuild Ukraine, it will need over half a trillion. That's a lot. And when you look at the market cap of the steel industry, it's around, the market value, it's around 1.6 trillion. So that will also fuel the demand for steel in future, when now there's peace and now we start to rebuild after the war, which is a bad thing. I don't like wars, but that will also add some positive impact on the demand of the steel. Same thing that is happening between Israel and Gaza. Of course, to rebuild Gaza, it will need steel again, because that's a construction of houses and a construction of infrastructure. And also the developing countries, they will need steel to develop, to build houses. When people are moving from rural areas to urban areas, that urbanization, it will need the construction of infrastructure and housing. So that will increase the steel demand over a long term. And also the building of these electrical vehicles, as we are moving away from these internal combustion engines, the ones that are using fossil fuels like petrol, diesels. So we're moving to EV, which is our electrical vehicle cars, So the building or the construction of these new electrical vehicle cars will require steel. And that will also increase the demand for steel, because manganese is used in steel to improve the strength of the steel, So that will also cause the demand for manganese to increase, which is now the steel industry and also the energy industry. And according to Mining Frontier here, in 2024, the market value of manganese was sitting at 33.41 billion, and it is forecasted to reach 37.62 billion this year in 2025, and that's a compound annual growth rate of around 12.24%, 12.24% compound annual growth rate in terms of the market value of the manganese. And by 2030, it is expected that manganese will grow to 66.84% billion at a compound annual growth rate of 12.24%. So you can see that now, if the manganese value, market value, is going to increase over the next 5 years by a compound annual growth rate of 12.24%, definitely I strongly believe that the companies that mines manganese, they will increase in terms of their share price more than 12.24%. So that's the reason, that's number one why I am so bullish on manganese. The second reason is because of we haven't invested a lot of money into looking for manganese, because we have a lot of manganese, and most of that manganese is here in South Africa. So when you look at the global exploration budget, there is less capital that is flowing toward exploring manganese resources or reserves, looking for manganese. And when you look at the production, the global production of manganese, there is 3 countries that dominate the global production of manganese, which is South Africa, Gabon, and Australia. And South Africa in 2023 produced around 35% of the global manganese productions, and the total figure in terms of the metric tons of manganese that was produced in 2023, it was 20 million metric tons it was produced, and 35% of that came from South Africa, and then 22% of that came from Gabon, and 14% of that came from Australia. Now, the interesting thing about these stats between these 3 countries, South Africa has mines that have a life of a mine over 100 years. For example, CP and Manganese, which is owned by Jupiter Mine, they own 49.9%. When you look at other countries such as Australia and Gabon, their mines, for example, in Gabon, it's Eramet. Eramet, it's a mine from Australia. It's a company from Australia that there's a mine that is operating in Gabon, producing manganese. They're producing over 6 million metric tons per annum. And that mine has a life of a mine of around 20 years. Then in Australia, there's Gemco, which is owned by South 32 and Anglo American. And the full name of that mine, it's Groot Eland Mining Company. And they're producing around 2.8 million metric tons per annum. When you look at their life of a mine, there is around 5 to 10 years. So basically, that tells you that in the next 10 to 20 years, these 2 mines, which is Eramet in Gabon and the other one in Australia, which is Gemco, they will be toward their end of the life of their mine. They will be toward the end of the life of a mine. These mining operations in these 2 countries, they will be depleting their resources. They will be done. They will be finished. They will be near to closure. So that, of course, it will increase the demand of manganese. The prices of manganese will go up, and hence a lot of companies that will still be in production, they will benefit from those rising prices of manganese. Of course, their profit margins will increase because they will just simply increase productions. So just to give you an example of what I'm talking about here in terms of disruption, in terms of the manganese supply, it will have an impact on the prices of manganese. If you look back in 2024, around March, the Australian mine, which is Gemco, which is producing around 2.8 million metric tons, it was disrupted. Operations were disrupted there by a cyclone, a tropical cyclone, and then the price of manganese spiked up. It spiked up a lot. Then for a couple of months, then it went back again. As soon as the market realized that, no, this mine, it will be restarted sooner. And also the demand for manganese during that time, it was not that much, as the steel industry was still struggling due to slow economic growth in China. So the prices collapsed again, but there was a spike. Now imagine in the next 10 to 20 years, when these mines, they are near their life of mine, which means now they will be now stopping operations if they don't do exploration. And then now we're going to be only having companies that are dominant in terms of global manganese production from here in South Africa. But that won't be enough. It won't meet the demand of manganese, because we're expecting the demand of manganese in the next 5 years to grow from currently at 33.4 million metric tons to over 60, over 60. It's around 66 million metric tons by 2030. So of course, that shortfall, it has to be filled by starting new mines. So if these mines in the next 10 to 20 years, they are closing due to depleting their resources, that will be a crisis, and the demand will be more than the supply, and the prices of manganese will go up. That's another reason why I'm bullish over a long term on manganese. I've been accumulating Jupiter mines because they are one of the lowest cost producing manganese mine through TP and Manganese in Northern Cape in the Kalahari manganese field. All right. This is an income statement of Jupiter Mines. You can see here the green bars represent the net income, which it's been declining over years because of the decline in the manganese price. So most of the commodities, stocks or companies, when the commodity price declines, their profit margins tend to decline. So there's a correlation between the profit margins and the commodity price. And due to the low demand or decreasing demand in the steel industry and also the manganese price, it has been also been declining, and that affected profit margins of manganese producers. But the company still pays dividends though, because it's one of the lowest cost manganese producer in the world, and they're still profitable even though the manganese price is currently at its cyclical lows. The company is still able to make profits and return capital to investors or shareholders in the form of dividends, which is a good thing. So for me, this is still a great company, and I believe that these profit margins will pick up as soon as the manganese price start to rise again due to a high demand within the steel industry, which requires the use of manganese for strengthening the steel. So from this graph here, from this income statement, which is a summary of the income statement, I think manganese is a good stock, but let's also look at other financial statements and other fundamentals. Jupiter Mines has a quite stable balance sheet. As you can see here, these guys, they have no debt. You can see the green bars here represent the amount of cash that the company has to their balance sheet, and the red bars represent the amount of debt that the company has. And you can see here there is no red bars. That means the company has no debt, it has only cash. So this is a quite stable balance sheet. A good business, a business that has less debt. You don't want to buy a business that has a lot of debt because they might go like bankrupt. And then if once they file for bankruptcy, that means you will lose your money if you invested into that company. They have to go through liquidations, a lot of chaos that you don't want to be involved into. So based on this summary of the balance sheet of Jupiter Mines, it is a great business so far, but just by looking at these two financial statements, the income statement and also the balance sheet. The competitive advantage of Jupiter Mines stems from its low cost in terms of producing the manganese. They're producing manganese at the lowest cost. What you see here in this graph, the red line represents the price of manganese, while the blue bars here at the bottom represent the cost of producing manganese at TP and Manganese, which is owned by Jupiter Mines. As you can see, since from 2019, the price of manganese has been declining, but the cost of producing manganese at TP and it's been maintained below the declining price, which makes them profitable. So imagine if the price now start to pick up and rise. That means that now at this lowest cost in terms of producing manganese, these guys, they will be making good profits because now their cost, they are maintained, at the same level. So if the price picks up, of course, that difference now between the price of manganese and also the cost of producing that manganese will be huge, which will mean now more profit margins for Jupiter Mines, and that will mean like more dividends to investors as time goes on. So this is a competitive advantage of Jupiter Mines, which is low cost. It's a low cost producing mine. So Jupiter Mines pays dividends, which is what I like about this company, and it has a longer life of a mine, over 100 years. So this is an investment for my family, for my kids in future, and the stock is still trading at an affordable prices, which is just 27 cents, and in the past 7 years, these guys, they've paid dividends that are almost equivalent to their current market capitalizations. As you can see here, 92% of current share price declared in dividends over past 7 years. 425 million Australian dollar dividends declared since 2019, and they're still paying dividends. And when you look at the price of the manganese, it is trading at its cyclical lows, but the guys are still profitable and they're still paying dividends. That shows how they are disciplined in terms of their cost management, within their TP and the Manganese mine there in the Northern Cape, within in the Kalahari manganese field, which is a good thing because that's their competitive advantage. They're a low-cost manganese producer. So even during bear markets of the manganese price, they're still able to produce, to make profits and pay dividends to investors. That's good. That's why I own the stock. That's why this stock is part of my mineral resource portfolio. So TPN Manganese, which is owned by Jupiter Mines, produces 3.6 million tons per annum, and they started production since in 2012, and the life of a mine is over 100 years. And the mine is located in the Kalahari Manganese Field in the Northern Cape, here in South Africa. So it's one of the mines that has the longest life of a mine. So it is still trading at low prices. That means you can accumulate a lot of shares and own the stock, which can benefit your future generation. Remember guys, I'm not a financial advisor. I am only doing these videos for educational purposes. If you like the stock, you can start accumulating shares and benefit for the next 100 years. You can pass it over to your next kids, your next generation, to your grandkids. They can also benefit from these holdings. With that being said guys, I will see you in the next video. And if you like the video, please do subscribe to my channel and do click the like button, and also share the video so that it can be viewed by a lot of guys who need this information here. All right, bye.